Thanks, Mark, and thank you to both Marks. That was a great job summarizing a lot of content in a short period of time. So oftentimes when we discuss the new standards with clients, their primary question is, so what do I need to do? And that's a fair question. So now that both Marks have walked you through the 5 steps under the new revenue recognition standard, I wanted to take a few minutes to discuss what an adoption project may look like and what you need to consider. First and foremost, if it's not clear already, the adoption of the new standards is significant, and it should not be a surprise that this undertaking cannot be completed successfully without a notable level of effort on your and other members of your organization's part. This project will take time, so it's critical that you start now. There are not many things about these new revenue recognition standards that you can consistently point to, but one is that adoption of the new standards will be different for every company, not just different for different industries. This will hold true for tech companies, perhaps more so than companies in other industries. The old adage holds true: the devil is in the details. As an example, I have a tech client that was negotiating a new significant contract. The client asked us to look at this particular contract in the context of the new revenue recognition standard, just so that they could better understand how the contract will look after the new standards are adopted. The Citrin client service team got together to review and discuss the contract as the starting point of the analysis. A disagreement quickly evolved in determining the number of performance obligations that could be identified in the contract. We were basically split between identifying a single performance obligation or perhaps 2 performance obligations. After a fairly lengthy debate, we decided to seek the input of another audit partner, someone who is known within our firm as a GAAP expert. We gave the individual the contract and agreed to meet once he had time to review it. When we re-met, he started by saying that it seemed fairly clear-cut to him that there was only 1 performance obligation within the contract. But as the conversation continued and the facts were further explored, we ultimately all agreed that there were actually 3 separate performance obligations. It's a funny story, but I tell you this not to cause alarm, but rather to exhibit how important interpreting the details of a contract can be. Rest assured, you'll get through this, but it is important for you to prepare yourselves for a 6 to 9 month undertaking that will consume a large number of hours and resources. The folks at Moore Stevens and Citrin Cooperman are here to help and to serve as a resource as you move forward. As I start to dive a little into the details of what a typical adoption project may look like, I thought it would be important to establish some overall considerations that will apply to any revenue recognition standard adoption project. First of all, recognize that project management best practices must be employed to ensure success. This will include involving the right people within your organization who will likely represent interests and functions beyond simply finance and accounting. A project plan with key milestones and deliverables must be agreed upon at the outset, and a dedicated project manager must be identified to hold people accountable to the established timeline. Additionally, you may find, similar to other technology companies, that your information systems do not readily and easily provide all information to continuously account for new customer contracts under the new standards. As a result, your adoption project may look toward an immediate or short-term solution to obtain the necessary data to adopt the new standards, with a longer-term or more permanent solution that involves system upgrades and/or modifications. In either case, short-term or long-term, this project will result in a significant amount of change management that will undoubtedly be company-wide, which means you will need to prepare a communication plan that explains what this accounting standard means, why it's important, and you better expect confusion, perhaps even pushback, from those who are not as in tune with accounting standards in general and what they may mean for your company. One further consideration is that it will be important to keep your auditors up to speed on your adoption project, your plan, your process, and any assumptions made and the conclusions you're reaching. Ultimately, Your auditors cannot implement the standards for you, but they can provide support and agreement with your assumptions and approach. Finally, be prepared for a high volume of memo drafting. Documentation will be vital, maintaining control and consistency throughout the project. So there are 3 distinct phases to an adoption project. You've got planning, data gathering, and assessment or analysis. As mentioned previously, after the initial year of adoption, there's likely to be an additional phase required to look at longer-term solutions that may involve system upgrades as well as other process improvements. Additionally, the data gathering and the analysis phases may be somewhat iterative, as missing information is identified that needs to be obtained in order to complete the analysis. What I want to do now is spend a few minutes discussing each phase. The planning phase is really the kickoff of the project. It's here that you will create the project task force, which should include key stakeholders, outside subject matter experts to the extent that you need them, as well as management sponsorship. Once that task force is assembled, it's extremely important that all members become conversant with the new revenue recognition standards. This can include not only reading the guidance, but also going through the many examples that are included within the guidance. Having a working knowledge of the standard is so critical in order to eliminate rework and to enable a productive and efficient analysis. Of course, the team does not need to know every detail of the standard at the outset, but must be familiar enough to know directionally where the project's going and what information will be most meaningful as you dive into the details. You should set overall expectations of what adoption of the standard will look like for your organization during this phase. Do you think that the pattern of revenue recognition will notably change? Do you see the projections previously created are out of line with how revenue may be recognized under the new standards? Is it possible that your financial results could drastically change in any given period? It's important to set these expectations so that the team is aligned with respect to the overall vision. It's very possible, maybe even likely, that the end result will differ from the expectations set at the outset. That's part of the analysis, but recognizing the nature of the causes of the differences will affirm that you have developed a good understanding of the standards and how it relates and applies to your situation. Ultimately, the planning phase will result in the creation of a project plan and timeline where tasks are assigned to team members with clear deliverables and milestones. Now we get into the meat and potatoes of the adoption project, which starts with gathering all the information needed. What may come as no surprise is that the key data points needed, the driver of the entire project, is all the contracts your company has with its customers. To get this in a workable format, you first need to identify all the revenue sources within the organization. In technology companies, this may include, and I know Mark Fagan went over this previously, licensing, consulting, customization, maintenance contracts, even hardware. Once the sources of revenue are completely identified, you need to look at the actual contracts you have with your customers. While you may start this process of inventorying your contracts at a high level, ultimately, you will need to compile the actual contracts because, as we said at the outset of this program, the devil's in the details. So recognizing the nuances in the actual contract terms will be important as you get into the analysis phase. That being said, you can bundle like contracts where the terms are exactly the same. For example, if you provide a SaaS to your customers who all subscribe to your software by signing an acceptance of use, then you may have one contract type to analyze. If your sale process includes negotiating terms of specific contracts to meet the specific needs of your customers, you may have a large number of contracts to analyze. Data gathering will also include compiling a list of all systems used during the revenue cycle. This may include your accounting system, but also reports out of your database, as well as supporting Excel spreadsheets. Not only should you identify the systems themselves, but you should also delineate what was internally developed and what was acquired from a third party, and what customization was done or is available to be done to those third-party systems. It's important to realize that much of your analysis will be summarized on a matrix that contemplates the 5 steps that both Marks discussed previously. This phase will include developing the format of such a matrix to ensure consistency of presentation, as well as the conclusions you've reached. At the end of the day, the matrix will serve as the backbone to the adoption project, and any contract analysis performed must be captured here. The matrix you use may look different from other organizations, but will ultimately capture contract type, revenue sources, revenue details, systems and reports used to obtain those details, key process and information owners. Don't be surprised or concerned if you don't have every input for the matrix. There will likely be gaps which need to be identified with an action plan of how such information will be gathered and by whom. Finally, this phase should identify the impact of any changes to revenue recognition. I've listed some of the items that are most commonly affected beyond financial reporting: commissions, loan covenants, investor reporting or commitments, projections, financial models, to name a few. The final phase of the initial year of adoption is the analysis of the information in the context of the standard itself. It largely includes evaluating each contract type and responding to the 5 steps that both Marks have walked through with you. Here you will need to apply a great deal of judgment. Any assumptions should be clearly articulated, not only as a means of supporting the conclusions reached, but also to ensure that consistency is applied across all contracts where applicable. Remember, when I said to be prepared to write a lot of memos, I want to circle back to that now. Each contract type needs to be supported with a memo that documents the nature of the contract, goes through the 5 steps, and draws a conclusion as to how revenue should be recognized and the related journal entries to record initial adoption and going forward through the remainder of the contract. These memos, coupled with the completed matrix, will serve as the suite of documentation provided to management and your auditors. The Year 1 project will conclude by updating your internal policies and procedures, revisiting the actual guidance just to ensure no details were overlooked, and conducting training with key process owners. After breathing a sigh of relief that you have successfully achieved initial adoption, congratulations. You can focus on process improvements that will ensure long-term compliance with the standards is maintained as efficiently and effectively as possible. As mentioned previously, this may include system upgrades and process improvements relating to gathering information and recording transactions on a going forward basis. To wrap up this part of our discussion, here is a high-level representative project timeline, which gives you a sense of how long each phase that we've discussed may take. As you can see, the project can easily take 6 months or more, with the bulk of the effort dedicated towards analyzing the specific customer contracts. With that, this concludes the formal part of our discussion.